Let's take a look at Google. Google is scheduled to report quarterly earning next Thursday after the market close. So let's see what the possible price target or price action might expect from the coming week, and also possibly from the earning report. So first of all, recall that back previous week I have show that the Google been going up 12 consecutive weeks, so that we shouldn't be surprised if we see some kind of pullback from it, because the last time that it went up almost 12 consecutive weeks was back in 2007, in which at this point in time that it went up 11 consecutive weeks, and on a 12 week it hit an all-time high of 747 and it came back down, and from that peak it came down to $412 and before it get a bounce back up. And it wasn't until recently that it came back up to that level, and on October 5th it actually hit a intraday high of 774. And also if we go back to looking at the daily price here, October 5th is actually the day, also the same day that the Dow 30 hit a non-confirmed new 52-week high. Also the one things to pay attention to is also Google did not close on a positive on that day, even though it did hit an intraday all-time high. The previous day was actually the all-time closing high, in which it closed at 768.05, and on the day that it hit that 774.38 intraday high, it actually only closed at 767.65. So ever since that day, it pulled back to below this 747, and it found some support off of the 20 EMA, then bounced back up above it, and then Friday actually came back down and come close below the 747 again, and actually found some support near the 20 EMA. So right now, what is the potential price support level? Well, maybe it could come down to this area here, somewhere around the 713 area, and then possibly if we also look at a certain price pattern here, might not be so apparent on this daily chart, but if we take a look at the 30-minute, we could actually see that there is a sort of head and shoulder pattern developing on the intraday 30-minute chart here. And if we take a major move between the top of the head to the baseline, the neckline, then we can actually see the potential price target from this pattern in the near term could get down to somewhere around that 706 area. And if we go back to the daily chart here, and if we use a Fibonacci tool and just get a little retracement measurement here, it's give us that somewhere around that 707, 706, so pretty close to the 713. But then also the other thing is we do have a trend line that come up here to kind of have this support here on this neckline. So that's a pretty key inflection point here. So we'll need to see would it be able to break below this 20 EMA or this 742 area. And the other possible level of support is maybe at this level here, which is somewhere around the 670 level here. Now, if you were saying, you probably question and say, well, that's a heck of a drop from 742 to somewhere around this 770 level, 670 level, or the 660 level. That's like an 80-point drop. Well, it's not inconceivable, because if you take a look at here, back in January, that earning report, we actually dropped from 640 down to this 560 area. So that's a 80-point drop, and it could happen with this earning report coming out next week. That seems like the price right now is kind of priced for perfection, and in any sort of disappointment or just a slight disappointment on the maybe possibly the forward-looking statement, then it could easily take this thing down to this level here, that 670 or 660 level. And so it's not inconceivable to see that kind of price drop. And if we also use a Fibonacci retracement tool, let me take this thing out and draw it from this peak down to this low here, and kind of get some idea what that retracement level looks like. And you can see here is the 38.2% retracement. This is the 50% retracement, and that is pretty close to this 670 level. It's kind of plays it down at these 665. So that's like a 80-point drop here from this here. If we see any kind of disappointed earning report. And the other thing is I want to show you is for those that might not have found this technique yet, is to get some idea on how to get a projection of what the market might price in for the earning price movement. There's the take the strangle prices and use that to calculate what the potential price move from the earning report. So if you take this, these the slightly out of money, the out of money and the in the money put price premium for the option, and same thing, the in the money and the out of the money call, and you add them all up and then divide that by 2, and that will give you the approximate number of what the market is pricing the stock price to move on the earning. And these prices, these premium will go up as the volatility get exploded right before the earning report. So keep an eye on these numbers right before the close on Thursday, and you probably will most likely see the volatility to get into the mid 50 or even the upper 50% level, and they just take these out of the money put and in the money put, out of the money call, in the money call, and then add them all up and divide by 2. See, right now, if it were the earning report was to come out last Friday, the Friday close, and this would be pricing it in like somewhere around $42 on the price move. And if that's the case, then you would see that it would bring this thing down to somewhere around the 700, 703 level, which is somewhere around down here, the 700, near the 50-day moving average. But that's just a example. You just have to wait until Thursday and use that. So, and a lot of time the market get it right, and most of the time, not necessarily most of the time, and sometimes they sort of undercut it. And usually, I sort of anticipate, I wouldn't be surprised to see Google will move somewhere around, anywhere between 6 to 8%. After the based on the earning report, and most likely with the trend of the market as with a negative sentiment, I wouldn't be surprised, and with the run up of the price, I wouldn't be surprised. It mostly would be on the downside. So, but I don't trade to earning because it's just a crapshoot, and I would rather just wait after earning and then see what direction they're going to take. Then if there's opportunity to set up a trade, then I will go and set up the trade. But trading to earning is just like gambling to me. So it's different stroke for different folks. Some people like it that way, but I don't. So hopefully, if you are trading to earning, that good luck to you.